Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, November 7th, 2019. It's 11:42 Eastern Time as I'm starting the video, and what I want to hit on is just an update on all the primary asset classes that I've been covering. An asset class, for example, equities are one asset class, gold, precious metals are another, treasury bonds are yet another, commodities are even another. So we're going to hit on those: gold, treasuries, the other precious metals as well as gold, natural gas, crude, and coffee. I need to do an update on coffee. Somebody asked about it today. It has hit a significant resistance level, one of the price targets on JO, and therefore the odds for a pullback are good. I'm going to get to that as well. So let's start out with the broad markets. What's happened? The only thing technically significant is today we pushed a little higher. When I updated this morning, we were pretty much on there back testing. So here's what happened. We popped a little bit above this is the 60-minute trend line that I've been highlighting recently, the rising wedge pattern on NQ. And there's your divergence line there. And so today we had a move up and we overshot it. There was a strong move up in this morning. Once that downtrend line, that minor downtrend line for last night, that was taken out, propelled in what I call a momentum fueled overshoot, but it took us back above the trend line. So that is significant. You can't really chalk that up to anything but a bullish event when you've already broken down, back tested once, and you had the opportunity for another back test and a reversal, but you move back above it. So it kind of muddles up and reduces the significance of this trend line. Let's just really other way to spin it. Now we still have the divergence that's been building. It's not new divergence, it's the same old divergence. And again, it's not as if these divergences don't play out. You had divergence right here, and it did lead for a correction. The only thing I've done different to this chart other than extend the divergence line is I added another minor uptrend line that may come into play here. And that is right here. It's a yellow trend line there. Now, if you recall yesterday at the lows, we hit although we didn't have a comparable trend line here on NQ, we did have the very significant uptrend line on QQQ. And there are a lot of traders, I'd say actually more traders during the day trading QQQ than NQ. So therefore you got to watch those, and that's where they stepped in and bought on that 60-minute trend line, and that was a low there. I mentioned that yesterday. All right, so there it is. These are the levels. Well, that one was already taken out, that minor trend line, but we still have the divergences, and so we'll watch this. Now I can say this: we had pretty decent support here. It was briefly taken out. I still think that's a big level, and it comes in around this alternative trend line. So if you're looking for the next short tactical trading up, quick trading up, break of those intersecting trend lines right here should do the trick to get us down to that 81.23 minimum target. And over here, this preferred target about 80.40, 80.50 right there on NQ. But as of now, today has the makings of a trend day. Now, a trend day is a day when an index or a security opens or moves, I should say, fairly steadily moves higher or lower throughout the day and to close at the highs of the day. In other words, if this is the market open right here, you go up and move up. In other words, if the market opens here and closes here, this isn't a trend day. We've seen a lot of this lately, back and forth stuff, and you can have a trend day to the downside as well, where security steadily, it can have some kickback rallies, but for the most part, you move lower throughout the day and then close at or near the lows. Now, although today so far has all the makings of a trend day, there's a few cracks. We've seen a big fade in the small caps. They've reversed today, and you also you have these divergences. So I would not surprise me at all to see this faded right now. There's hard to, I don't see a solid sell signal, but again, we have these divergences building, and there's some other cracks in the market I'll get to in a second here. So that's NQ. That's what it looks like on ES. Again, from the kind of bigger picture, not the very small micro picture, but the bigger picture, at least on the 60-minute chart. That's still an intermediate time frame anyways, but when you look back here, that's all that happens. We've been diverging continuing to work our way up on very low, dangerously low volume, as I've talked about, building these divergences, and I still favor a move down here. I know right now it seems like the market will never stop rallying, and that's usually about when it does, when the masses can see to that fact. But that's it. So let's, like I said, I don't have an official trade on this because my convictions aren't high yet. We need to see, at least to put on a swing trade. Other than these quick, short-term pullback trades or bounce trades, we need some kind of decent sell signal on the daily chart. So those are the indexes. That's what they look like. Let me show you the small caps here. I haven't updated that in a while, and I know some of you guys trade IWM or RTY, the small cap ETFs. That it doesn't look like a lot here, but I have a 1 minute chart down below. I can show you a 1 minute chart here, right here. This is today, right here. You can see a pretty decent turnaround. This was the high right here. That was this morning at about 8:42 a.m. and since then they've been fading the small caps, and so therefore usually on a big trend day you're going to see, if the S&P 500 is going up, the Nasdaq, small caps will follow too. They don't lead the large caps, but there's some distribution going on here. So like I said, I'm not completely convinced by this rally, and let me show you a couple of it. Well, let's jump to some other securities here. Let's jump into natural gas because that one was an official trade idea and still is. There's not enough in the charts, and no, yes, we did hit my preferred target. I posted those charts this morning, from a few days ago when we shorted it. And as a rule, since I've started this site years back, I've always used ETFs or individual stocks as the official proxies because I understand that a lot of investors, retail traders, either don't have the skill sets or the capital requirements to trade futures. And as I said this morning, I've always said, I had a unwritten rule that I would only count profit targets being hit during the regular trading session because I understand too newer traders aren't familiar with how to trade in the after-hours session, but it's really not that difficult. So I'll never change a trade after the fact. We'll leave that degas. It's still an active trade. I'm going to update it right here. If I decide going forward, I probably, at least on securities like that one, because I've traded natural gas for so many years, and I can tell you that so many of the reversals, my price targets are hit right, the morning of, with anywhere from half an hour to a couple hours before the market opens, sometimes after the close, but usually it's pre-market for some reason, and you get the big turnarounds. Anyways, so that's what happened today, and I did an update on the front page, so you've seen that chart where the basis of that trade was a break of this bearish rising wedge with nat gas at resistance. It's not shown on this chart here, but just to the left there, that's a resistance zone. There were reactions there, just like this one. It was long here and up to this point here, and then shorted it here for a pullback trade on the break of the wedge. So it's almost an identical setup as to back then. There's your bearish rising wedge, 60-minute chart. Overbought at resistance, again virtually an identical technical setup as the previous one, and I made my thoughts clear. Longer term, or I've been intermediate longer term bullish since back here. Actually before this was the first corrective wave. When you go back to the daily charts, in July is where I started making a longer term bullish case for natural gas, and this was just the first corrective wave. Bottom back in July after that post. So you guys have probably seen that one by now. All right, so where are we? What's happened there? Well, we had the inventory report. I always try to point that out. I should have made mention again this morning, but I talk about it all the time. Look at the economic calendar. It's every once a week, the natural gas inventory. And so that's what happened. We got a spike up at 10:30 a.m., but we're still below that resistance zone. And so the basis for this trade is still in play, and I'm leaving it as an active trade now. You can look at the comment section under yesterday's last update. I said, I got stopped out. I told somebody asked what I'd be doing with my natural gas. And so here it is under the entry on that recent short trade, more degas and nat gas, and down here somebody asked yesterday, where is it? Oh, there it is. Are you going to bring it home, swing down to that 278 level? And yes, I said yes. I plan to lower stops fairly tight. Once it gets around 280, although I favor a bounce off that 278 support level, and so that's what I did. I lowered stops down to 280 when it got crossed below there this morning. You can see it right here. Where is it? Nat gas right here. This was this morning. There's that 278 target. We crossed down to 280 there, so that's what I did. I lowered my stops at that point in case we made a backfill of the gap and got taken out there. But again, because that was, if you recall, again, I put up a chart this morning. 278 was my preferred swing target all along, and for the life of me, I don't know why I didn't list that first target on UGAS like I did today. I added it, or DGAS. I should have had it at that top of that, or the bottom of the gap there on DGAS. Whatever reason, I just had a target up for an entire backfill of the gap, even though I was just looking for a counter trend trade. Now, with that being said, I'm going to leave it here, and I'm even leaving that second target. Sometimes I'll revise a trade and put a first, eliminate that target, move it down here, because the way you can trade this, you can take profits if and when we hit this new first target today at 95.75. We more than far exceeded that in the pre-market. We were up here, I think it was 98 and change, and DGAS once that, my preferred swing target on natural gas was hit and then exceeded, but then we had the reversal and of course the inventory report. But point being, this chart is still constructive. We had positive divergence here. Remember, DGAS is just a mirror image of natural gas futures. Except, it's got the 3-time leverage. So where we had a positive, we had natural gas, as I just showed you a minute ago or talked about, running into resistance with negative divergence. We had DGAS falling down to support right here, the previous reaction lows. That's the same previous highs on natural gas over there, and so far so good. It's reversed there. So therefore, the way to trade this, if you're in it, I've left the stop alone. It's moving back up right now. I think good shot will hit it, and if you don't, then that's it. It's like any trade. You move on to the next one if you get stopped out. But as of now, we'll leave the stop where it is, because there's still room for this one to hit that target and quite possibly make a backfill of that gap right there. And so from where we're at now, that's not what I meant to do. Delete that. Just tried to measure, grab a measuring tool a little below there because I'll move the trend line. That'd give it about another 12% gain from where we're at now, and this trade's clearly profitable from where we entered before. So that's that. Let's go back to natural gas. There it is. So really nothing much has changed. Now we have a little minor downtrend off the high. So if you're still in this one, here's a potential downtrend line. It's only a few reactions. I can tell you, if it pops that, it's probably going to pop the highs. But there it is. So we saw just the knee-jerk reaction, which is very common after the inventory report. People, tend to go one way or another, and you don't try to read too much into that. And they faded that pop so far. And so now, if we can cut back below 278, especially take out that previous reaction low, we're probably going to go in and backfill that gap there down to about 272. And like I said, there's several ways to skin a cat. There's several ways to trade a stock or a security. If you're in this one and you rode that out, or you shorted it on the bounce or whatever, and you want to hold out for either this or this, one of the rules in trading is cut your winners and cut your losers and let your winners run. And by doing that, then you can just trail a stop down. So you can either put a hard buy to cover order there on the cover short, a hair above that 272 support, or when it gets there, lower your stops, maybe at about right here. That way you may allow for a little minor reaction, and it might keep you in the trade, and you may go on to test this downtrend, which has not been tested now for a long time. So that's that. And as I was talking just now, I had a price alert fire off. There it is. We just hit that first target. So I'll get a post out on that in a little bit. So in the fact that they did kind of fade that the inventory pop, where did it go? Is pretty bearish so far. That's a pretty hard fade. So whoever bought into that, whatever bulls, got all excited on the inventory report, and it's probably squeezed some shorts out. I got stopped out right before that at that 280 level, but if anybody else was in it, probably got squeezed out. And what that does is when you clear out short interest and suck in longs on a pop like that, you move down. There's fewer shorts in the natural gas to cover. And remember, when a short covers their position, they buy that security. That's what you do. You buy to cover. You didn't own it before. You borrowed somebody else's shares. You sold them short. That's how shorting works, at least with a stock. And then you bought to cover. Same thing with futures, really. And then, of course, when you have the longs that bought in and jumped all over that pop, thinking natural gas was going to break out to new highs, now they've got to have stops somewhere. Everybody's different, but some might have already been stopped out. And as we keep moving lower, more and more of those stops are going to get hit. So, anyways, let's move on to the next one. First target's now been hit. Our T-gas target, the official trade, and of course we already hit my second and preferred swing target this morning on nat gas NG futures. Okay, and the update for coffee. This is KC coffee futures. Like I said, I had screenshotted this one. Was going to do an update this morning, then I decided to kind of keep things on topic, so I did the first update with natural gas and the risk on risk off assets, and somebody asked for an update. So this is we started focus on this most recent. On and off over the years, I trade almost all these commodities. I'll revisit long, short, and the last, I started harping on it back here with this divergent low. We had a breakout buy signal triggered here, and it's up about 18% off the lows. That's a nice lift right now in coffee. And again, the common theme really at all times is diversify your portfolio and use asset allocation. That's part of diversification, meaning diversified portfolio is not QQQ, SPY, and IWM long. 3 different securities covering thousands of stocks right there, spread among all of those, or at least technically speaking about 2,600 stock. No, 2,600 stocks. 2,000 in the Russell small cap index, roughly 500 in the S&P 500, and then of course roughly 100 in the NASDAQ 100. And so either way, but what is my point? You're not diversified. They're going to move together. Birds of a feather flock together. That's one asset class. Those are equities. And although one day the IWM or small caps can be up or down versus the large caps, overall, put a long-term chart, they're going to move in synchronicity. Just like if you buy gold, silver, platinum in GDX, you're not diversified. You're putting all your money in precious metals, and precious metal stocks are going to move with it. So when you want asset classes that have no correlation, and again, it's a way to diversify your portfolio, because 1 week your coffee long might be firing on all cylinders. Next week it's crapping out, correcting as anything does. Nothing goes straight up forever, but at that the time it's correcting there, maybe your index stock index positions are doing well, and that's been the trend so far. All right, so where are we at now? Getting a little bit lofty here. I've said this many times. Just like natural gas, I've traded coffee for many years, and I can say this: when coffee wants to run, when it picks a trend, that trend can be very resilient and keep going and defy divergences, can defy overbought, oversold readings. The last time I updated coffee was right here. I had to point out we had divergences just like I did here. That one led for a pretty decent correction, as did this little divergent high. This divergence did play out for a correction, but more so a very minor one, mostly in time, just a little bit in price, where we're at resistance. So we powered on up. Here's a trend line to watch now. So right now, coffee futures are still up on the day. Let me go to JO, because that's the trading proxy for those of you that don't trade futures. And as I've been highlighting on this trade, I said let's just keep it simple, guys, and use the same targets for the last official trade that I had on coffee back here. I had these 4 targets. That third one was hit, and then at the time I said I expected a pullback. I just didn't expect it to go back that far, and we did reverse there. So I know a lot of you booked profits. I booked profits there, and then it came full circle. Put in another divergent low right here, positive divergence on the indicators, just like it had positive divergence back here, the basis for this trade. And like I always say, divergence in itself is not a buy signal when you look for a breakout then of the level. So we broke out. That's where we went long back then, rode it up to here. This time around, positive divergence, again, was a 60-minute chart that we really honed in on that entry there on the futures, and maybe even I might have had it on JO 60-minute, but you can see this was that 60-minute downtrend, right? So there was your buy signal there on a break of that minor downtrend line. Then you had a secondary downtrend line that was taken out. Now where are we at? Boom, this is resistance, about 36.10 up to about 36.50. It's a resistance zone. That's right about where I had that last second target before, and we're there. We hit it today. You can see almost a perfect tag of that level high of 36.07. I had that line at 36.09, close enough for government work. I always suggest taking profits just a little shy of resistance. Why is that line there? I may have even tweaked it from before because there's a big old gap right here, and gaps are natural, resistance levels. Not just a gap, there's also a lot of reactions from above that level. So while coffee, like I just said a minute ago, can, and when it wants to, stay overbought or become more overbought, just like it did back here. When you first hit overbought, you're about right here, but it still had some lift to go right there, about another 10%. It could do that, but look, odds are that you're probably going to get a reaction here. So one of two ways to do this. If you are swinging for the fences and holding out for a longer term trend trade, which I do like, I still very much like coffee. I'm starting to see a lot of these commodities firming up, and I believe I don't want to get off on a tangent, but I think the big surprise of the market coming in the coming months is you're going to start to see uptick in inflation that's going to catch the Fed and most market participants off guard, and that could spoil the easy money party, the low rate party. So, and why am I saying that? Because I'm seeing commodities. We know things that the housing market, things that go into the CPI, there's a lot of things. It's a basket of goods and services. And some of the big components are the cost of housing. Rents, I've heard, have gone through the roof. There's not a lot of housing inventory on the market. People are staying in their houses longer, and prices have been holding up there with the stock, and they will as long as the stock market holds up. But rents have been going up through the roof, and I don't know. A lot of people think the government fudges the CPI. I'm not a conspiracy theorist. I think it just does a lousy job. I can tell you definitively, I've seen across the board my expenses for my cable TV and all the services I have there, cell phone bill, gas has been down there, staying down relatively low, but everything else, I haven't seen a price decrease on anything in years, and I've seen a heck of a lot of price increases, as well as I work from home, so I don't go to the stores. I buy almost everything from Amazon, and I always look when I order food for my dog or cat or whatever it is. It's amazing. You can go back for the last 2 years. I just ordered a new creepy crawly for the pool. Prices have gone up 10-20% in just the last few years on almost everything I'm buying. So this talk of no inflation, I have to say I don't know where the Fed comes up with that. Well, the CPI must be just a very flawed index. I digress. Sorry, guys. Moving on here. All right. So there's coffee. Yes, I do think it will continue to rise, but I put the odds decent for a pullback. Now, how do you trade that? You do a couple things. You don't have to book profits. Well, you can set a stop. Here's a trend line I just gave you. So on any pullback, ideally this uptrend line should hold, and so you could have a stop somewhere below that, and or any pullback to this 34.70 level, if you're not in coffee, would offer an objective entry, depending on what the 60-minute charts look like. So we don't have to pull back. We could power on through, but if we do, this would be my ideal pullback zone to about this trend line, widen it up just maybe a little bit like that, down to about 34.70. Not much below that. I really wouldn't want to see it. So maybe a stop right there if you're trying to stay in this trade as a longer term trend trade. Maybe a stop somewhere a little bit below there to allow for the next pullback or reaction in coffee before the next leg up here to that target, and eventually this target up here. Okay, gold. I'm sure there's interest in gold today. I am, believe it or not, is a big red candle, but I'm liking gold here, and just took some today. All right, the reason for that is gold has, number one, we're looking at the chart here, support. These are gold futures, and you can see this is a daily chart. I've showed you a 60-minute chart quite a bit lately. 1, 2, 3 reactions on that level. And remember, that was a previous high. There was a period of consolidation here, and then what happened after that? Boom, gold broke out and ripped. That confirms that as an important technical level, and we've been consolidating. Nobody can argue whether you're longer term bullish or bearish on gold. You cannot argue it's not in a bull market. It is, just like the stock market. And you can say what you want. I can tell you where I think the stock market's going, but I cannot tell you that it's not in a bull market. And nobody can tell you that gold's not in a bull market either. So therefore, maybe that bull market's over. There's no evidence to support that. And right now it seems like it's been nothing more than a multi-month consolidation range. And what I'm drawing for you here, we call this, in technical analysis, this is a descending triangle pattern. They can break either way. Respect which way it breaks. A solid, big red daily candle, especially if we close the week below there, that would open the door for a move maybe all the way back here to that 1374-ish level, and you have intersecting uptrend line support that would probably come in like this if it worked its way down there. And I can tell you this, you wouldn't want to ride out that drop. At least I wouldn't. But if it gets there and the chart's confirmed, that might be a next objective entry. That would probably entail the stock market having some more upside here in the coming weeks or so. So there it is. However, this can go the other way. While I can't guarantee you which way this thing breaks, whether it breaks to the upside or downside, I can guarantee you that gold is at support right now. And although it looks like death today, with the market up and the precious metals being sold, it is an objective long entry. Yeah, it's TA 101. There's two ways that I go long on a security. I either buy a breakout above resistance. In this case, it would be, for like a downtrend line like this. That's an objective long. Or I buy a pullback to support during an uptrend. It's that simple. And so there it is. And the way it works is you don't get married to it. The two ways that I short a stock is on a bounce back to resistance or a break of support. So therefore, if it breaks support, then especially impulsively, it's probably going to go lower. A little intraday dips don't matter. You can see intraday dip there. It's really one of two things: either a solid close below, or if you just started waterfalling through there today, tomorrow, you get down this far, even if it's intraday, they're probably not going to close it back up there. At that point, you might want to let it go. So wherever you want to put your stops. And at the end of the day, if you don't like catching falling knives and things like this, buying things when they're down and nobody else wants to buy, stand aside, wait for the charts to firm up, see if this support holds, or maybe even wait to see if you get a breakout above the top of that triangle pattern there, the descending triangle pattern. Let's look at the 60-minute chart. I posted this morning, and I had revised the trend line here, and I said minor. There was only, actually never even got much of a reaction there, so it's not a great trend line you want to see. I like to see three distinct reactions. We fell to it this morning, but we didn't really bounce, so that never gave us a third reaction. And what I had said this morning is, if it were to break that, we had pretty strong potential divergences in the indicators. It is still potential. To me, there's a difference, and this is just me. I've never read this in a textbook, but I call it potential divergence when you have the indicators making higher lows versus prices making lower lows, and then that divergence is confirmed if and when we put in a higher peak in the indicators. Right now, see, these are momentum indicators. They're heading lower. They can continue lower. And if they take out this previous low, then you've taken out the divergence. So I need to see a bullish crossover on the PPO, and it needs to happen soon, because right now the RSI is pretty much hair below, but roughly equal lows, and if the PPO goes much lower, it's going to take that out. So that's it, and that's why I think gold has a shot here, because like I said, it's also at long-term support on the daily chart. And we had that before. We had this move down here. One other thing I'm going to show you right now, I should add a line to the chart and show you. I've been doing this recently with securities. Put the RSI right here. This is 3 months of price action we're looking at, and we've only seen this is the RSI 9 right here. We've only seen this level hit right here, that 1080, 1, 2, 3, almost for it, never even got there. Last time it hit it was right here. The time before that was right there. You got a little bounce and you went on to make divergence. And I pointed that out the other day. I put a line here and said we were there, and we did get a bounce. But most of the major reversals come after you come extremely oversold. You have a little bounce, another leg down, and then put in a slightly higher low on the RSI as well as the other indicators. In other words, that's positive divergence, and that's what we have right now. Really don't want to see it go much lower because it'll take out the RSI divergence, and if it goes much lower beyond that, it'll take out the PPO divergence. So there it is. Again, call it a a shot. Take a shot at a falling knife, but again with a stop not too far below, because then the technicals both here on the 60-minute and the daily get muddled up. So it's all about risk reward. Yeah, I've actually added 2 lots today, and that's it. I don't want to add any more after this, unless it reverses and something goes. And I'm talking for, well, I should say, I might let it morph into a swing trade. The market would have to reverse soon. At the very least, a bounce trade, come back up here to this level right here. This was pretty decent support, and that's, I think, the minimum target there. All right, I know that looks like a Christmas tree, a lot of lines. Let's move on. What else do I want to show you? Platinum is another precious metal. I mentioned being short that one. That one I just covered today. I'd been short for since back here we had a divergent high, and I also said that I took silver and gold the other day, which I had, and then in and out of those already, but as hedges to this short. But this one's played out, divergent high right there, negative divergence. Then it went on to break down below the trend line right there. And charts consolidated, had that nice leg down, but look at this, and I might even go long. I covered that short, and may go long, but I don't want to get too heavy right now. I'm going to stick with gold for right now, and but you can see support right below. Who knows, maybe I'll take a shot on this, a little platinum as well. Okay, and I'm also just scooped some silver as well, back into that again. Silver really looks good here, especially if gold bounce. In fact, of all of them right now, this one looks the best, because if gold holds up, I think you're going to get more bang for your buck. This is a very, very good support level. Look at all these reactions here. Look at that major reaction low right there, and here we are again at 16,942. Positive divergence, just like gold. Potential needs to reverse here, needs to hold that support. So far so good. Minimum bounce target for just a quick trade, I'd say back up here at about 17,404, and quite possibly we could be, what I can tell you almost, I can tell you factually, here's the bottom of this multi-month trading range we've been in now for a while on the precious metals. They're in a bull market. If you are a long-term investor, forget about this short-term stuff. That's an objective long with a stop somewhat, but you give a wider stop, because as a long-term investor, you could have been buying all along around the bottom of this trading zone, or even the bottom end of the range right there. We had a lot of support here. You buy pullback, scale in for the next leg up, especially if you took profits around here where we had divergences, a lot of things saying, hey, the metals got too far ahead of themselves, too much too fast, they're going to need to correct. And as I've talked about quite a bit, they've corrected more so in time than in price. I know I'm talking on the futures here, and I know a lot of you guys don't trade futures. SLV, that's a messy chart, is the ETF for silver. This is what it looks like on a weekly chart. Here's your bull market. This is a big run. We had this potential flag. It's kind of been muddled up now, so I'm going to remove that at this point. It certainly hasn't played out. Here's that big area. It's a sloppy area, like I said. And the only way to really trade it for long-term investors is scale back into positions you took profits back here. I had a target there, it was hit, and had a momentum fueled overshoot. 1758 was a long-standing upside target for silver, and these are my long-term bull market targets where I think it's going over time. However, it could continue lower, and we may have to let it go and buy it back at lower levels. But there's silver, gold, GLD. You're probably familiar with the gold ETF, GLD. There was that potential flag. We started to move above it, but then a reversal, big red sticks today. So I can just say this. That's an ugly red candle on a weekly chart. But like I just showed you a minute ago, gold's at support. So you could take a shot It might not be the highest probability trade, meaning the highest chance of success, but it is objective. You can, use a stop, a little bit on the downside, and if this happens to be, if we happen to be getting close to the end of this consolidation period, and there is going to be another leg up to my long-term target, 173.87, you're talking about 27% profit potential. Many times that in the minors. I'm not crazy. Somebody asked the other day. Yes, I have not been posting anything about the miners in a while. If you followed my site for years, or as a subscriber, gold, mining, anything not to do with just general stock market analysis is premium content. But as you know, I love the mining stocks. I engage them actively, long and short. But I stay away. I stay away during periods of consolidation. This is sloppy. You can't. There's no trade, no swing trade to be made here. You'll get chopped into pieces. Especially, and let me say this because I know I repeat myself a lot because I always have new people coming to the site. Nugget and dust, you do not want to own those during periods. This is when you want to own. There's a lot of buzz out there on the internet that the 3-time leverage ETFs are horrible. You shouldn't hold them for anything more than a day trade. Blah blah blah. That is certainly the case. You don't want to hold them for an extended period of time when you have a choppy, volatile asset, especially in a sideways range. However, as I've showed you many times in the past, you will outperform on nugget or dust when you catch these unidirectional rips and dips, these trends. Right there, GDX went up from the low to the high 50%, and if you got nugget, you would think, okay, at best I might get 150%, right? Here it is. Sorry for the pause there. You got 200% right there, 215%. Why? It is explained in the FAQ page. If you go to resources, ETF related questions, there's a question about decay. It's all about math. It's simple mathematics how that works, and I explain it in there. So, but I also explain this is when you will lose money. You'll lose more than GDX drops because you're going to have the decay working against you as well. So know when to hold nugget or dust as swing trades, and if you're not sure but you want to be in the minors, just go with GDX. You're better off there than trying to leverage up if you're unsure of the trend. Alright, I'm going to have to cut it short here. We'll do crude oil later. I'll do an update on there. It's not an official trade or anything. I just threw out a trade. But I do want to update TLT because this is more closely related to gold, really, and the stock market. Stock market continues to rally. You'll probably continue to see money come out of treasuries and gold. However, if the stock market reverses and those 60-minute divergences and, more importantly, the daily divergences play out soon, trade to be made here in TLT. This is a weekly chart. Here's your weekly uptrend line. It's off the lows back in late 2018. We had a divergent low. This is where I had this wedge. I was bullish here for the divergent low, then the breakout of the wedge, and that was the big run we've had. We're back to that trend line. We're actually at intersecting support levels. They have a longer term trend line right here. Comes off the 2011 lows. You can see it did a really good job of defining working as support. We broke down and that triggered that correction, and so that trend line extended out comes into play. We had a reaction off it there. We jumped above it. I'd put a higher weighting on this uptrend line right here. So it's the same thing as gold. Treasury bonds have corrected down to support where they're either going to hold or break. And if they break, they're going to head on down to the next level there. But at the very least, we may get a bounce trade soon here in the risk-off assets because they have, they're pretty oversold down to support, and that's TLT. That's a weekly chart again. And CB for you futures traders. Here's CB. We hit that first target yesterday, 159.003. We hit it and then reversed there, and that reversal, it's been impulsive, but just like gold, by the skin of its teeth. Well, you know what, we could reverse that white line's down below, but what happens with the PPO if we reverse that orange line? The PPO could come back in here, turn up, you'd have almost divergence. And again, I showed you really it's more about longer term. Did I cover this? I'm sorry guys, I've got so much I'm covering today. Don't know. No, I didn't cover this. It was gold I showed you. I don't think I covered TLT earlier. ZB, I'm sorry. But there it is. I did post something this morning. It is cracking below that support zone. This thing's going to need to reverse. This is a daily chart here. It would be really nice and quite bullish to see it reverse and close back up there today. That would entail probably a pretty good dump into the close in the stock market, or maybe buyers come in and rally the Treasury bonds up. So it's in a precarious position. It's breaking that support, that previous reaction low, but you do have some pretty strong divergence, at least RSI divergence here. So it's similar to gold. It's a play at or near support. Yeah, I'm just not crazy about that big red candle down through that trend line. I did show you TLT at a weekly trend line on support. So we're really where this thing needs to hold in reverse now. And again, you can take a shot at it or stand aside, see if you get the reversal. Maybe you have to buy in a little bit higher, and that way you have a little bit higher probability on the trade, although your entry price wouldn't be as favorable. I think you could take ZB here with a pretty tight stop. It should not go much lower. In fact, there is some support down here about 155, 187. All right, I'm going to wrap it up here. This has been a long video, a lot longer than I wanted to, but again, a lot of stuff to cover, and I'm trying to get all these asset classes in one video, and I'll try to make a point to maybe break them down going forward. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.